All right, so I am still out on my little walk here. It is the middle of the day in July in Southwest Florida, and while not ridiculously hot, it's hot out. Still thinking about some conversations and interactions I've had with folks recently, some other conversations with some industry professionals when it comes to credit cards. There are just a lot of misconceptions and misunderstandings about how they impact your score and what to be aware of when managing your credit cards so that you do not see your credit score suffering as a result of them, because credit cards absolutely can work to your advantage and boost your credit score. In a lot of conversations that I've had here lately, the focus from the consumer perspective has been on the dollar volume of debt that's outstanding on a given credit card. And the amount of money outstanding on the credit card, that comes into play. But when it comes to how does a credit card balance impact your credit score, it's not so much the dollar volume, but it's what is that dollar volume relative to the credit limit or the spending limit on that credit card. So you could have a scenario where someone owes $1,000 on 5 different credit cards. And their credit limits or their spending limit on all 5 of those credit cards is, let's say, $20,000. So they owe $5,000, but when you add up the spending limit on all the cards, it's $100,000. So cumulatively and individually, you're at a very, very low, what is known as utilization ratio. You are only utilizing $1,000 out of $20,000 available. That would be on each card and cumulatively in total. So you're only at a 5% utilization ratio, which is absolutely wonderful, because 0 to 9% as a utilization ratio is like the A+++ sweet spot when it comes to credit card balances and your credit score. Now, let's say that instead of $1,000 on those 5 credit cards, there was only $200 on those 5 credit cards. But each of those 5 credit cards has a $400 spending limit or credit limit. So in this case, individually and cumulatively, we are now talking about a 50% utilization ratio on those credit card accounts. So while the dollar volume is only a total of $1,000 outstanding in terms of borrowed money, from a credit score perspective, that $1,000 represents 50% of the $2,000 available between all 5 of those cards. So with all other variables being equal from one person to another, the person that owes $1,000 in total, but only has a credit limit of $2,000 available to them on those cards, is going to have a lower credit score than the person that owes $5,000, but that is only 5% of the overall spending limit that is available to them. So I am hoping that that makes sense. Obviously, when it comes to credit cards, if you are going to be carrying any level of a balance and incurring an interest charge on those credit cards, you want to be hyper aware and very, diligent in your management of your spending and trying to get that paid off as soon as possible. Obviously, when it comes to borrowed money, credit cards are the least ideal way to go about doing that, unless, of course, you're dealing with some sort of a, promotional offer of 0% for 12 or 24 months. And while you definitely need to pay attention to the details of that offer and make sure that you get that paid off in the time frame required so you do not incur, back interest charges or whatever, they can be used in those scenarios, and it can be very affordable money. But if you are talking about simply borrowed money and an outstanding balance on just a day-to-day purchase transaction type of a basis, they are pretty much undoubtedly the worst way to go about borrowing money, just because of the interest rate that credit cards typically carry. So having an awareness of what's outstanding, paying attention to the balance relative to how much you could spend on that card, and then obviously being aware of what your interest rate and financing terms are on any given card if you have to carry a balance on it for a period of time, is something you need to be mindful of and definitely pay attention to, just in the spirit of saving money and not spending money that you don't need to spend. If there's ever anything that I can do for you, or you have any questions in regard to credit cards or credit scoring or anything else pertaining to household money management, debt management, credit score optimization, or what impact your credit score may have in regard to the cost of financing a big ticket item, reach out anytime. Send me a message, shoot me a text, send me an email, DM me. I am here to be a resource for you. If you haven't checked out my course yet, go ahead and do so. LiveBetterFinancially101.com. There was no outsourcing, there was no editing, no third-party involvement. The entire course was created by yours truly in the spirit of you living your best financial life and learning lots of those little things that you most likely didn't learn going through a standard schooling curriculum. Make it a great day out there. Thanks for watching. I'll be back again with some future content. And along the way, I hope you enjoy your day, and I hope you live your best financial life. So leaving this park right at the moment and seeing this Butterflies of Lee County sign, it got me thinking. There are a lot of butterflies on that sign. And when it comes to credit cards, there are a lot of credit card options out there in the market. Department stores, individual retailers, your main primary like a Visa, MasterCard, Discover, American Express. There are many, many options, lots of cards available. One more final parting thought in regard to credit score optimization. You want to strive to have about the same number of revolving credit card accounts that you do installment loans. So installment loans are your fixed payments over a set period of time. So things like a mortgage or an automobile loan or lease, a boat loan, a camper or a trailer loan, something that you're paying over 5 or 10 or 6 or 3 years, and then it's gone. So if you have a car and let's say a jet ski and maybe a student loan or two, those would all be considered installment loans. And you ideally would want to have 3, maybe 4 credit cards. You don't want your installment loan versus your revolving credit card count to be way out of whack. So you don't want to have 1 auto loan and 10 credit cards. And you probably, again, from a credit scoring optimization perspective, you probably don't want to have 8 installment loans and no credit cards. Not saying that you couldn't still have an exceptional credit score if you had a bunch of installment loans out there for toys and things and you paid them on time and as agreed. But again, from a perspective of optimizing where your credit score could be, you really want to be just aware and a little bit strategic with your credit cards. Most people don't need 6 or 7 or 10 credit cards. Pick your primary one for your points, your rewards, your miles, and whatever benefit you enjoy receiving out of using kind of a daily or a primary credit card. And then maybe have 2 or 3 others tied to your preferred or favorite stores or Amazon or whatever it may be. There's no need to be opening a new card every time you go somewhere for that one-time incentive of getting 25% off your purchase if you open your card today, but you don't normally shop there. So you're probably not going to use that card much again going forward. So again, just a parting thought. I saw all the butterflies and it made me think about how many credit cards are out there. So do your best to try to keep your accounts in line. And I understand, you might have a car that gets paid off, so there may be a period of time where you don't have an auto loan. But then, maybe you trade that car in and get another auto loan. So between a mortgage and a car and a boat or anything else that you might have in an installment loan capacity, just be aware of the count and compare that to how many credit cards you have and try to keep those in alignment as much as possible. Make it a great day and we'll see you again soon. Well, hey there, if you're still watching this, I'd like to thank you for tuning in, watching this video, and also for tuning into my channel. Whether it be for yourself or anyone that you may know, feel free to share this video. And if you'd like to see future content, go ahead and subscribe. If there's anything that I can do for you, please don't hesitate to reach out. I built out my course with the heartfelt passion of wanting to enable folks to get started on a better foot in life regarding finances and not incur some of the problems I have witnessed throughout the course of my career that has held them back from taking next steps when they were ready to in their life journey. I thank you again for watching. If there's ever anything I can do for you, I'll look forward to hearing from you. Take care.